All right, welcome back to MMG. Let's talk about the markets and the economy and the C.OV. You guys know what I'm talking about. So, I'm gonna try to make this a quick video. I try to make every video a quick video, but I can't because there's a lot of information I really want to get out to you guys so you guys understand what's I believe is going on at least. You could always go in the right hand corner and speed up the videos by 15, 25, 50% and make the videos go much quicker. So I posted this in the private group yesterday, and this literally happened as I said it would. And that's a big call. I've never seen anyone make a call like for the next day that is this big. So I'm just going to play it real quick. Here's the deal. The Powell has to come out tomorrow and do something. Because if they don't, I mean, it's gonna fall. This is the weekly in the Dow Jones Industrial. It's gonna fall by the end of tomorrow to like 23,600 minimum. It'll drop. It'll continue to drop, and it'll straight drop down. Let's take a look at the futures. Hold on, I have my other... Alright, so I said that yesterday. And what happened today? Well, Jerome came out, unscheduled, little nudge to the markets. And this was right after the banks on CNBC were literally calling for rate cuts. BOFA, emergency rate cut possible. BOFA calls for 50 basis point cut at March meeting. So the Fed's capitulating. So here's what the Federal Reserve, they have to do everything that they imaginably could possibly do right now. Because this, I can't say the word because they will, suppress my videos. But the C.OV, which has spooked the markets and pretty much destroyed China and the global supply chain, that's going to get worse with time. And at least for the immediate future, for the next few weeks and months, I'm pretty sure it's going to get much, much worse. And the market is finally pricing that in. At the same time, the repo market they cut the amount of money they were putting on the overnight lending for the repo market. And that was just icing on the cake, and the markets collapsed, literally. And I called that, and I warned everyone it's gonna drop. And it's, the markets take the stairs up, and they take the elevator down. And I had that great analogy. They're not going to take the elevator down. The door's going to open, person's going to walk in like the elevator's there, but it's not, and they fall down the elevator chute. So what happened? This morning, banks call for a rate cut, and Fed comes out, and Powell makes a statement, not sure where, that the fundamentals are strong. However, the COV, because of the COV, we need to cut. We're looking at using all of our tools in our toolbox, and that means cutting rates. And, the only tool they have is to cut rates and print money. That they have two tools. All right. How many bullets do they have to save this market from crashing? Well, for one, they can't save the market from crashing. It's going to crash. I mean, technically, they could print so much money that the market just keeps going up like Venezuela style. But I don't think that's going to work. They could temporarily cause kind of a rebound, but not make new highs maybe make new highs, but I doubt it, especially if the COV thing gets worse and worse, right? But what they could do is slow down the decline in the markets. And they could cause maybe a V-bottom rebound type enormous bounce on the market. We'll look at the charts in a little bit. I'll also talk about gold and silver being smashed overnight. That was insane. Kept me up all night. So the Fed capitulated finally. And the markets, they didn't, I mean, it stopped them from crashing. It did bounce, but it wasn't very significant by the end, by the close. Because it closed at 4, right? And they came out with the announcement around 2 or 3. And it didn't really do much, which is funny. So, and right now the futures fund rate, the futures are pricing in over a 90% probability of a 50-point cut for the next FOMC meeting, which is on the 17th of March. Well, this market's not going to make it until then. They're going to come out. So I called it yesterday that the Fed's going to come out and say something like they're going to cut rates or QE. They're going to say the word QE for a reason. But so they're going to try to keep the market from crashing by just speaking and putting out announcements, forward guidance, that's what they call it. It's not going to be enough. I believe by next week, by the end of next week, or maybe 2 weeks from now, they have to do it before the 17th, where they will cut rates before the 17th. And maybe that might not even be enough. And then the Fed's going to have to come out and literally say the magic word, QE, money capital injections, which is just printing trillions of dollars to calm everyone down and stop the sell-off. Because this is a crash, guys. All right. I mean, this is the worst crash since 2009. It's already that. So, yeah, stocks on pace for worst week since financial crisis. It is the worst week since the financial crisis. Percentage-wise, it's not that bad, but it's pretty bad. If this continues next week, it's crashing. All the 401ks, the baby boomers are going to panic and sell and get out of the market. All right, so gold was smashed last night. And it was unbelievable. It's 2 a.m. I stayed up late. I usually stay up late till like 2 a.m. And I'm looking at silver. I look at the chart. And all of a sudden, silver just starts dropping. Just keeps dropping and dropping. Here's silver. But this is an opportunity, guys. This is a great opportunity. And I called it in the private room. I even put it out in the newsroom for free. I'm like, buy the dip. BTFD means buy the freaking dip. All right. Here's silver. So this is a bank smash. And I know a lot of people are like, yeah, they don't manipulate. Yeah, they do. Are you kidding? They've already been caught. For the past few years, Deutsche, JP, a few other ones have been caught already manipulating the metals markets, especially silver and gold. Nobody in the right mind would sell billions and tens of billions of dollars worth of silver all at once, like market order sell. What you do is you want to keep those gains. So what you end up doing is you slowly sell into the market. So you don't drop the price because you want to sell at the highest possible price to keep that gain, right? So look at this. This is a 4-hourly time frame. Within 1 day, I mean, this is a huge dump. Last night, it fell 10% in one night. That's unbelievable. Let's go to an hourly to show you how fast this really fell. Look at these moves down. It's just dropping all last night. It's just dropping and dropping and dropping. I started watching it around here, and no, it was around here, and let's take it to a 30-minute, because I want you to see how fast. Now, you could make that argument, and the CNBC anchors, of course, and this is it's obviously a buying opportunity, because the CNBC anchors were talking down gold. And it was because this hedge fund manager came on, and he's like, yeah, I'm buying gold. And I missed the opportunity to sell at the top. I usually I've caught those in the past. And this one we didn't see coming. And he said, well, I'm not getting back into the market. What I'm doing is I'm buying gold and gold stocks. And then the CNBC anchors cut him off, and then they started down talking gold. And they're like, oh, well, a lot of people are getting margin calls and taking profits. And, gold speculation. What you end up selling gold for cash at the end of the day. Meanwhile, the dollar's been falling today. So, no, they don't. Guys, they're cheerleaders for the market. They're all anti-gold. They're cheerleaders for crypto as well. They pretty much cheerlead everything that will wreck you in the end. It might go up for some time, for a while, because it's a bubble and it's being artificially pumped up by central bank money printing. And then one day you wake up and the markets crash like they have this week, right? Which I've been warning about forever, for like a month now. I'm not a stopped clock like the other gold bugs, but I've been warning for weeks and months now. Like, I would not risk chasing the last 10%. And then once the COV thing happened in mainland China, I'm like, this is it. I mean, this is a serious, it's going to spread around the world. It's going to destroy the supply chain and the globalized economy that's intertwined. Like, every parts and piece, everything you buy online or buy these days comes from like 5 different countries. It's a lot of 20, 30%, 20 some percent come from China alone. So, all right. So they smashed gold. And I didn't think they would smash it. Maybe smash it back down to 1740. But to take it all the way down, this is silver, by the way. To take silver down to 1635, that's a bank smash. Now, why do they do that? They don't do it just to, screw us over. They do it to, because if silver and gold keep going higher and higher, it signals to the market like, this is it. And behind the scenes, central banks need to load up on more silver and gold for themselves. And the banks are doing that as well, because there's going to be some serious financial Armageddon coming. All right, so silver was crashing last night, and about an hour later, gold started crashing. Gold didn't do anything. It wasn't even moving, and silver was crashing. That's how I know it's manipulated. So they manipulate silver, and then silver somehow triggers the algos or makes people panic, and then they sell gold as well. And the mining stocks were just destroyed. I'm talking 15, 17, 30% sell-off in one night. Overnight. Or on the open as well. So that sucks. I mean, my portfolio took a massive drawdown. Massive hit. I was even holding like massive positions in leveraged ETFs. But it's okay because my short positions made up for it, and I'm still up. But that stung. It stung. Because I was up massively. Monday, my portfolio was up like, the entire thing was up 20%. And then today is down like 25%. That hurts. All right. So I sold my short position, covered the losses on the leveraged gold ETF positions. Anyways, this is an awesome dip buying opportunity if you've missed out on the previous months of rallying. And it sucks for us who've been holding and had these massive gains, because now we just kind of went, I mean, I'm still up, but we took a huge hit. It all depends when you bought, right? But if you haven't, this is the dip buying opportunity for the next few weeks and months, unless it's, Armageddon, end of the world type scenario because of the COV. Let's hope not. Let's hope for the best. Plan for the worst, though. Prepare. Buy things you need. All right, so awesome dip buying opportunity, and I literally called the bottom, the dip to buy. I put it out in the private group, like, buy this dip right here, right now. It hit my blue equilibrium line on the 4-hour time frame. This is gold, by the way. It hit my 4-hour, and it started bouncing, and then literally an hour later, on CNBC, the Fed, Powell came out and said we're going to cut rates. So this is it. This is that dip buying opportunity. Now, this actually might be a good thing that they smashed gold overnight. And the reason they probably smashed it is because they knew that the central bank's going to come out and they're going to make this announcement. So they're front running it. Well, maybe the banks smashed it, like JP or one of the other big banks, Bank of America, Citi, who knows. And then Deutsche, whatever. And then they smashed it overnight. They flushed out the weak hands, and now they bought the dip for themselves. And because they know that the Fed's capitulating and they're going to print money like crazy and cut rates to zero. So I would take advantage of this opportunity. Also, I still have the 60% sale. The link is below this video in the description section if you're interested in mining stocks and learning how to trade, because there's all kinds of things I do, videos. We're gonna start having conferences when I have time. Probably tomorrow. I'll do a conference tomorrow. And trading tutorial. I share all of the indicators I use, and then it's a great group of guys. We do endless research, great opportunities in the mining sector, and we look for opportunities. And I also trade other things. Like I have a bunch of positions right now on multiple different stocks that are benefiting from this C.OV scenario. And great shorting opportunities. It's been pretty good. Except the smash last night. You're not going to win them all, Anyways, it's a great buying opportunity, I believe. Now, it still looks bad, but it's on support now, guys. It's on support. I was putting out charts, better charts than this. Here, if you could go to volume profile, do fixed range, and you could take a look at all the buyers since the previous swing low on the daily here and weekly. There's a ton of buyers around the $1,600 to $1,570 range, all the way down to $1,550. A ton of buyers. So this is major support area for gold, guys, and not just that. The Fed's capitulated again. It's on major support. I am looking for a rebound in gold and silver. It's unbelievable how much they smashed silver, but the manipulation will break. All it takes is a sovereign nation to panic, like maybe China, and just start buying all the physical all around the world, and maybe ask for delivery on the futures COMEX, and then we're just going to see limit up on the futures market for silver and gold, and the market will get cornered, and no manipulation will stop the buying. And the mining stocks will go up. Unless this C.O.V thing really brings Armageddon type scenario, which I don't think it'll get that bad in the next few months. Long term it will, because the combination of the C.O.V and the global supply chain breaking in this globalized world where every major company in the US and Europe and all around the world relies on this fragile, super complex supply chain and trade, that it might be Armageddon like later this year, or who knows, right? Or next year. It's the combination of the global economy collapsing and the C.O.V thing, right? That's the problem. All right. But this environment, you couldn't ask for anything better for metals. It's just that, it's a little manipulated. Everything is. But don't worry, the more something's manipulated, the bigger the gains when they lose control of manipulation. Obviously, everyone thought the stock market was going to go up forever, and they're like, oh, it's going to go up forever. It's manipulated. Well, it just dropped a huge amount. It just dropped. Let's take a look. The Dow has dropped from its all-time high it dropped 16% in what? 1, 2, 3, 4, 5, 6 days, 7 days, or a little bit more. But the bulk of this crash, this is a crash. Look at the velocity. It's like an airdrop. Look at the velocity of this. It's just gapping down every day it opens. The market opens. It's a crash. The only reason it stopped today, and we have this huge buying candle here. Look at this wick. We have this hammer, is because the Fed stepped in, right? Anyways, but guys, this will end. At some point, it won't matter what the Fed does. Believe me. All right. But for now, the more the Fed does manipulate, the more likelihood gold and silver is going to go higher, because the more they cut the rates, the more money they print. That cash has to go somewhere. Just a small percentage of it needs to go into metals and mining stocks, and we're going to see life-changing money. All right. So what else? Fed Chair Powell issues statement to call crashing markets fails. Right. I made this, by the way. Oh, it's not up. It's on my Twitter, guys. If you go on my Twitter and my Instagram, I posted this funny picture I made of Powell. It's not in the newsroom. I haven't put it up yet. Maybe I'll make it my thumbnail. I don't know. All right. So far, I've been right about everything. Of course, I'm not a prophet. I can't foreshadow manipulation, overnight manipulation. That's pretty obvious. That's what it was. Yeah, maybe some people got margin calls. They ran the stops, guys, and people were getting margin calls and they had to sell metals. And you have to understand, manipulation also triggers real investors' stop losses and over leveraged positions. So it's manipulation to trigger the investors to lose their money and to shake them out of positions. That's what happened here. All right. And this is the greatest buying opportunity, especially if you haven't gotten any exposure to gold and silver mining stocks for some possible, gains. I mean, only risk money you're willing to lose, but taking maybe a little bit of it, trying to make it into a lot, might help you out in life. So, yeah, I mean, Cali is going to be like, you ever see, there was that movie, I never watched it, Escape from LA. It's pretty much what's going to happen there. Yeah, it's just escalating, guys. So, I think before the 17th, next FOMC, when the Federal Reserve comes out, they're going to do QE before the next FOMC. They're going to cut rates probably like next week and then do QE to stop this, because the panic is really starting to set in. Trump came out and pretty much shot himself in the foot, and he's trying to downplay this, which is the worst thing you could do. I understand. He literally said, I don't want to cause a panic, and I get it. But at the same time, it's like, but if it gets worse, right? It keeps spreading, and people start dropping in public, and there's videos, right? On Twitter and all over. Although they're going to censor him. He's going to look really bad. Really, really bad. especially coming up for the election season. I mean, I know it's national security to like keep the markets up at this point and to keep the public from panicking, but you could at least go tell people like calmly and slowly get prepared. That's what they should have been doing. Releasing information slowly to go and buy some things that you need. Because what happens is panics happen when no one's prepared and no one's taking it seriously. I need to put out a survey on Twitter. I'll put up a poll. But I tweeted out yesterday. So are the normies at your work, guys, are they starting to talk about this seriously or anything? And most people were tweeting back to me, no, they're making fun of me, and they're still making fun of it and joking around, sending memes around like it's a joke. Yeah, well, so we're not there yet. We're not quite there yet. But this could happen quickly. So once someone in New York and Cali, once in heavily populated cities, people start dropping in, like, Grand Central Station, people are going to start freaking out. There's already shelves going. Okay, so the masks are already gone in the U.S. Like, the shelves are already empty for that. But food is going to start disappearing. Now, there's going to be a supply. There's going to be empty shelves no matter what, because China is no longer delivering to the U.S. Like Walmart, 70% of the crap in there comes from China. So once people start visually seeing things like empty shelves, and then some people are going to just start wearing masks because they're smart, then it's going to get into the psyche, because people are sheep. They're pretty stupid. They migrate in masses. That's why no one saw this market crash coming except for me and like a small percentage of the population. That's why I made a shit ton of money off of my shorts. And I'm still holding a few. All right. What's my next thing? I don't know. Oh, okay, here. This is Apple. $1 trillion company, no longer. What did I tell you guys? These $1 trillion companies, they need to get cut down to size, right? Trillion. They make phones. Come on. What do they really do? What does Facebook do? Sell advertisement in your data? Is that $1 trillion? Is that worth hundreds of billions? No, it's not. It's like the dot-com bubble 2.0. Here's the indices. Where's the... All right, here we go. No, wrong one. Well, here's the dollar. Let me show you guys. This is a weekly chart of the dollar. So what if the milkshake theory doesn't work out? Okay, maybe this was the milkshake theory. This was the milkshake theory. It's already happened now. What if the dollar starts falling because of the QE that's about to happen, the rate cuts, and the panic? Because everyone says, oh, King Dollar. Everyone's going to panic into the dollar. And foreign nations and companies and banks need to pay off their debt in dollars. Well, what if they just all start defaulting because of the C.OV thing and the dollar starts crashing? And, oh yeah, the CNBC anchors, they're like, no, safe havens are bonds. How are they bonds if they're printing trillions of dollars? You guys understand bonds and treasuries are dollars. They're just baskets of dollars, really, if you think about it. Why would you hold government debt if they can't pay it off? And they could default, especially if the economy tanks and tax revenues just disappear overnight. And the U.S. is running $1 trillion deficits, spending deficits. Right? Why would you hold U.S. debt? Not just that, there's no yield on bonds. Why would you hold bonds if there's no yield on them? No, you buy gold and silver. Because it'll always be there. No one could default on it. It's the ultimate safe haven. All right. The Treasury yield. All right, let me show you guys. The 10-year yield. This is as inverted as it gets. The yield inversion. I'm not going to bring it up this time. I want to make a shorter video. It's down at 1.13. That's insane. Unbelievable. Unbelievable. Hold on. Let me bring it up. Let's bring up the... Treasury yield. Hang in there. Hang in there. Hold. Here it is. All right. So, and nobody was talking about this on CNBC or any news. They weren't talking about the yield curve inverting. Again, for the second time, it inverted early, like spring or summer of 2019, and that was your warning. That was your 8-month warning out to the next recession. We're in it right now, guys. This is definitely the beginning of the end. Look at this. The 1 month is higher than the 10-year. That's insane. It's almost there with the 20-year. It's crazy. Crazy. Here's the 2008 recession. Let me play it for you guys. Here's the yield curve. See how it rises and then inverts the short term? Now, this is today. Watch it. And then it normalized. This is how it's supposed to look. This is normal. Your shorter term debt is supposed to yield less, and then your long term debt is supposed to yield longer for government debt, right? For bonds. So this is what year are we in? 2015, 16. This is 2017, 18, 19. Yield inverted. 2020, current. Completely inverted. And nobody was talking about this for the past few months, except for me. And maybe a few other tubers, I don't know. Alright guys, this is the opportunity. I mean, I've had some great shorting, shorts. Tesla, beautiful. I might cover this though. All kinds of great stuff for the private members. Here's the FANG index. This is what, if the Fed's going to buy anything, they're going to buy the FANG index. All right, guys. Smash some likes. Leave anything in the comment section. I'll see you guys next time. I'll probably make a video Saturday night or Sunday morning. And share my videos. That's the only way my channel grows. And check out the 60% discount. I'm taking it away Sunday. This is the last time, all right? Because a lot of people wanted in, so I'm going to get those few that missed out on the opportunity. Sunday, 60% discounts, $120. You'll never find that ever again for the services I provide. And then $10 a month, all right? And you will make your money back, right? That you spent. So it's easy to make $120 trading, and then... and some, right? Maybe life-changing. I'm hoping for life-changing. I literally hold everything I talk about, and I trade, everything that I talk about. All right, guys, until next time.